Hey everyone, this is the Trader Investor, and I want to do a follow-up of this morning's video regarding the markets. I said I'm expecting to have an explosive move. What does explosive move really mean? For me, it means anything above a $3 move in one direction or another. And if it's a choppy $3 move, it moves up, it moves down, moves up, moves down, overall it's $3, I don't consider that an explosive move. But today we had a pretty good day, and I'll show you. If you look at the daily, we had this day that started up as a good gap up. It closed the gap and it reversed back and closed near where it opened. High to low 420.72 to 416.44. That's more than $4.30 or so. So that's, to me, that's an explosive move, provided it happens in a burst, not in chunks. And chunks meaning, like, the last 3 days we've had some movements, high to low 418 to 417. That's a dollar movement, nothing much there. The next day 417.93, 418 to about 416 and change, nothing much there. Yesterday we've had a little bit wider ranges, that those ranges kept expanding. That's why after 3 days in a row and a little bit of an expansion and a little bit of manipulation, I expected that explosive move today, and we got it. And so on yesterday, the complete move was 418 change, close to 419 to 417 and change, so $2 move. For me, that's not part of explosive. Plus, we had the small range, and then all of a sudden from low to high and then back down to low. So that wasn't an interesting day. And this morning when I did the video right before the markets opened, I said we're going to open here because that's where the futures were telling us, that what the pre-market price was telling us, that we were going to open there. We knew that. Which way was the market going? I said we're going to see for the 15 minutes to break on either side. And it broke on the lower side, and I do hope you have taken advantage of it and participated in this down move. Pretty significant down move from 419.86 all the way down to 416.72. Right, so that's a $3 move, and in a SPY you do 10, 20, 30, 40 contracts, and they were cheap today, because if you take the expiration of tomorrow, you got them for about a dollar, right at the money. You could get them about $1. You could go slightly out of the money and get them for 80, 75 cents, 80 cents. So those were some pretty cheap contracts. At Delta 40 and Delta 50, $3 move is very significant. We don't need a Tesla move. We need just a significant enough move in the SPYs, and we go by the number of contracts because they are cheap. The spread is narrow. That's why I love these options. The spread is narrow. It's very liquid. I can get in and out in seconds. I don't have to wait for somebody to agree to my price. The spread is so narrow, I can get in and out. If I want to get out really fast, I can even do a market order without having to worry about slippage, because I know the spread is very narrow. So there were 3 areas of potential exits. Did you take advantage of those exits? And I'll very clearly show you how I view those exits. When we gapped up that 15-minute range, what I do is I take the high of the last closing bar and the low of today, because we have a gap up, and that's an imbalance area. Price has to close that gap somehow. It might not be today, it might not be this week, but eventually it needs to close that gap because it's a gap that's left open. Sometimes it doesn't close it. There's no requirement, but that's just how the markets work. If you study the charts enough, you'll understand that these imbalances close more times than not. So based on this knowledge, when I entered at the break of the 15 minutes, I knew that my first target was the middle of this imbalance. there was no reason for this market to go any lower based on just regular news or charts or anything. There was no reason. I knew we wanted to close this gap, so I knew that this was a potential area where we could reverse. And where does this line up to? It lines up with the high of yesterday. So when these two line up, that for me is a sign, target number one. I'm going to lock in 50% of my position this move. This is a pretty significant move, 419.84 to 418.97. That's almost $1 move. That's a very, very nice move. That's $40 per contract if you got a delta 40 option, and you get 10 contracts. That's $400, and you're done for the day. And you can multiply that. I don't recommend doing a lot of contracts unless your account size allows for the risk, because when we enter here, if we are wrong, we get out either at the close above this mid-range or at any price breaking this high range. That's where we get out. So that's a pretty wide range for today. So from 419.80 something to 420.71, that's almost $1 move. That's a very high risk. I'm risking half of that because my target is about $1. So if we're wrong, that's where we get out. Therefore, just manage your contract size accordingly. If you're wrong, -$1 at delta 40, 10 contracts, you lose at -$1, you lose $400. At minus 50 cents, you lose $200 with 10 contracts. So multiply your contract size based on your risk appetite. But risk appetite really is a bad word. It just means I'm a risky person, I'm taking a big risk. But by risk appetite, for me, it means based on my account size, what's the maximum number of risks I can take. That's how I enter my positions. So this was target number one. Target number two, obviously, it's this gap here, this whole imbalance area, which also coincides with the 15-minute range high of yesterday. That's target number two. So 50% of my position is off here, 25% of my position is off here, and the other 25%, I trail it. I don't have any specific area. If it hits an area, I don't exit. And the way I trail it, so just overall, the total, 50% here, I'm at break even. The other 25% here, I'm starting to trail at the high of each bar. At the high of each bar, I am trailing my other position. So in this instance, I was not lucky enough to participate in this whole move because I got stopped out here. So I'm okay with that. I am not complaining at all. I'm okay with that. Because this could have been a complete reversal, and if I haven't put a stop here, what if it's a complete reversal and comes back to break even or even higher, like it did here? Here it went above the mid range, way above my entry, and this portion of the contract that is remaining that was gaining, pretty significantly, now it's at a loss. That's why I like to protect it this way. And sometimes price continues to drive down strongly. Sometimes it stops you out early, prematurely, but we don't know. The safest thing is to have a good stop. Now, another thing you can do if you think that my stops are too tight, for me they work, for me it's perfect, but if you think that stop is too tight, there's two things you can do. One, you can do one bar before. So at the high of one bar before, you didn't get stopped out. You got stopped out when we reached this bar here, this inside bar, you got stopped out here. So where did you get stopped out? Same place I did. I got better pricing because every minute that passes by, theta decay is eating away at your option price. Not that much, but I got a better exit than you did. Now that's one potential exit. The second one is to follow it with the VWAP. The reason why I like the VWAP represents volume weighted average price. It means what is the price point where the buying and selling happen the most. So based on that, this is not an indicator that for trigger or anything. It just gives me a visual where most price actions and price are related to each other. So you can trade it with VWAP, and again you got stopped out about the same place that I did. So that's another option. The other thing you can do is after you hit your second target, then you can say if price goes down another 50 cents, another $1, I'm going to exit. So you got that exit even, I think the same bar, because 418 to, no, not quite the same bar, but it took a couple of bars. If you did 50 cents, if you did $1, then you got out here. So there's some variations you can use, but for me, I like to keep things simple. The only way I can keep it simple is at the high of the previous bar. At the high of the previous bar, and I'm done for the day. I'm completely done for the day. Now I get some bonuses. Today I got a bonus. The bonus is because I was able to look at the chart. When I saw this V bounce, this V-shape recovery, then I started to watch for a close above VWAP, meaning price is starting to get stronger and stronger on to the upside. And once I have a close above VWAP, I don't want to see any close below VWAP. And at the high of the bar that closes, so close below VWAP, I need to see a retracement. And once I see a retracement and that retracement does not close below VWAP, at the high of that bar I enter. So I entered here at 418.82 and look what I got, 420.45. So almost another $2 move. Of course, I didn't get that full $2 because I just wanted to get out $1 more, and I was done for the day. I was busy. I just happened to catch this chart, and I took advantage of this explosive 1, 2, 3, 15 minutes. In 45 minutes, hit the target without seeing any pain. Once I entered, I saw no pain, right? This is a straight out. That's why I like to do these trailing stops right below, because if there's any pain that comes after my entry, I want to get out even if I don't get my maximum profit. But that was not there. I had my dollar move exit done for the day. I was already done here, and I just happened to get a bonus because I saw a nice V-shape. That's why it's important to understand the markets. Did I need to trade the Qs, the IWM, and the diamonds? No, because all I needed is one of them to work out to give me a beautiful setup. When I have one beautiful setup, I'm done for the day. And it's better to trade what you see. Do not complicate things. And do not force trade. Do not trade multiple times. Just trade once. And it's good to go. And you got these moves, beautiful moves. In all of them, it didn't matter which one you chose to enter, you got the moves. And I'll tell you one thing why I chose SPY over IWM. Even when I did the analysis this morning, I think I was favoring that. IWM had a big range, 15 minutes. And the low of that range was already closing this gap. I didn't have any more room. For me, technically, there was no additional reason for this price to go any lower because I was already at the highs of yesterday. That's where price came down to and bounced. And breaking this could be a signal of strength. But, if I have SPY, that low here, let me take out this drawing for you. This low here is nowhere near the high, nowhere near the gap. So this was a clearer entry for me. That's why I took the SPY. So imbalance, beautiful setup, entry, beautiful setup on the reverse, entry. Qs, I didn't even look at Qs because I already had the beautiful setup, but same thing. Now the Qs on the reverse side, if you had played the Qs on the reverse side, you would have entered at the 339.95, 340 area, and you got the almost a dollar move, not quite a dollar move, and you would have been stopped out, because if my stop is what you follow, you would have been stopped out. But it's okay. We don't always get them right. We don't always get them wrong. In IWM, there was no entry because we closed above that pullback, didn't close. So I'm expecting to go long at the break of that. That break never happened. That's why I like to see this. This confirms a break of structure. Structure, area of value, execute. Very simple method, right? What is the structure? What is the area of value? Where do I execute? So my structure was, I'm in a downtrend, area of value, the break of the 15-minute range, and execute at that moment. And then find next area of values to enter. So this was simple. This is how I traded today. And when I set up and do my analysis in the morning, this is what I look for. Am I expecting an explosive move? Yes. Am I taking advantage of it? Yes. Then I take advantage of it. Of course, we make mistakes at times, or the market says, I changed my mind. It is normal if the market says, you know what, I'm going to fake you out here. I'm just going to do this. Those days happen. There's nothing we can do about it. There's nothing, no preparation that will prevent us from doing anything about entering that position. The only thing we can do is have a stop here or have a stop here. And once we know our risk and we enter number of contracts based on that risk, boom, we exit the trade for a small loss, come back and repeat the cycle when we get our explosive move. But today was a beautiful, beautiful day. That's what I wanted to go over. And everyone, don't forget to like this video. Don't forget to encourage me, to tell me to keep doing these. These analysis is what's going to help all of us do better, ask questions. I'm here to provide support. I want people to be successful. I want you to have a method where you have a successful trade. Successful doesn't mean trade by trade we are winners. We don't look at winning every trade. This is not a football game where, you know, if you don't win, your coach yells at you. No, this is a business where some potatoes go bad, we throw them away. Some potatoes are good and we sell them at market price. Some potatoes are good and we sell them better than the market price. That's just how business works. And so if we treat this as a business, not as a hobby, then we have a game plan, we have a strategy, we follow that strategy. If a strategy is losing money consecutive days, doesn't mean you should get out of that strategy. Keep reassessing, reevaluating your strategy. Was it your entry that was wrong, or was it the market telling you, I don't want to give you money today? If it's a market, then it's okay, because there's another day you'll keep making money. Don't give up on a strategy just because you have 2-3 losing trades. Now, the worst thing is, don't trade without stops. You have to have stops. You have to know where you're going to exit. Once you have that in place, you're good to go. All right, everyone, take care, and I'll see you in the next video.